26th, and we see the oil markets opening in Asia a little bit down this morning. Let's kick off with our Monday morning quarterback, as they say in the US, Omar Najia, Global Head of Derivatives at BB Energy. His treasured Bitcoin has taken a hit over the last while. Omar, your outlook this Monday morning?
We like Bitcoin. We like Bitcoin if it goes negative.
It's a buy at 50 grand. It's a buy. It's a steal. I mean, Jesus. 50 grand.
Well, actually, look, I can show you something. Look, this is Bitcoin today, right?
Oh, Jesus.
You see it bounce?
Wow.
You see it bounce in five beautiful waves. So that could be the start of something. But anyway, nothing much is happening. People talking about this, the COVID situation in India. So you have basically and they're meeting in Vienna. But I don't see very much news apart from that. But the India situation is sad. But I read the statistics: 350,000 infections a day and 2,700 deaths. If that's accurate, then that mortality rate is 0.0007%. So I don't know if it's.
If you put a multiple of 100 on it, I think you might be getting close to where India's at. And ultimately, the question of any place in any country, isn't it, at the end of the day, is what can your health system handle? And all policy then moves from there. But on the point of view of sentiment, Omar, of course, the scale is large, whatever measurement one uses. From a sentiment point of view, the market is clearly across all asset classes, as we've talked, including Bitcoin, is very positive. There's all upward momentum. Does something like this shake the sentiment, the positive sentiment?
Well, I mean, the short answer is no. So where most of the trading goes on, where most of the money is, where most of, people are that have these quote unquote sentiments, is in the West, so US, EU, Far East, blah blah blah. So unfortunately, when it comes to India, it's not that people don't care; that it really doesn't kind of it's kind of out of sight, out of mind kind of thing. So yeah, I mean, let's keep our fingers crossed and all the rest of it. But in terms of sentiment, I think whatever you look at, like you were saying, whether it be equities, oil, or Bitcoin, it's not that we're starting on new trends to the upside. It's basically markets are basically not correcting, but maybe finishing corrections is the right word. So we're just looking for that little spark to start us off to the upside in a meaningful way, or we continue kind of sideways for a while. But I really don't think that we're all going to fall out of bed and all the rest of it. I think as we move into the second half of the year, we're going to see more demand. I read a story actually from the Lukoil CEO just now, saying that the OPEC Plus deal could be quote unquote forever. Which goes back to that narrative about a managed oil market, just like we have the Fed managing equities, etc. So I'm positive across the board.
Adi Imsirovic, Senior Research Fellow, the Oxford Institute for Energy Studies, positive across the board, and yet oil prices can't seem to find a momentum to support that. Unlike equities that just seems to want to hit a record every day?
Very good question. I think we're still in the sort of demand shock mode. We still have to recover from that demand shock. And I think the situation in India, as Omar said, whatever the figures are, that the expectation in India is that the loss of, let's say, gasoline demand resulting from this latest wave of COVID will be up to about 500,000 barrels. So it's not a massive volume. The problem is that it's a reminder that COVID is still around, and all the unknowns are out there, unknowns, as we would call it, are out there, because if we do have another strain coming out of India that's a little bit more viral, that's more dangerous, then we're back to square one in this race between vaccines and new strains of the virus. So we're still in that sort of risk off mode every now and then. Every time we have a new wave, we have a risk off situation where the market suddenly says, okay, well, hold your horses. Fundamentals still looking very, very good. We can go into them in a minute, but it's just a stark reminder that we are not out of the woods yet.
Indeed is the case. Randall Mohammed, VP Energy Solutions at Ahart Solutions International. Randall, the view from America would be on this list of positives, all things positive, I suppose. The vaccine rollout continues to perform, and generally all indicators in the US are moving towards growth and opening, etc. Is that what it feels like on the ground? Or are we over reading the situation from far away?
Yeah, hi, good morning, Sean. Look, absolutely, Sean. I think, the US has done a tremendous job in rolling out the vaccines, and those vaccines will continue to roll out. Look, we've seen bond yields, the 10-year and the 30-year bond yield go from less than 1% all the way up to 1.7%. Recently there's been a slight pullback to about 1.5, 1.6%. So look, there's inflation is definitely starting to creep in somewhat. Interest rates are on the rise, and it'll be interesting to see the Fed's reaction. I don't anticipate a whole lot. I think they will continue with some open market operations, possibly to sell off some more of those securities into the market. But we'll have to wait and see what Mr. Powell's response is. American Airlines did announce that they are preparing all their aircrafts for the summer boost in summer travel. A lot of my very close friends have already booked their vacations. Some have booked cruises later on in December. So look, the cup is definitely half full when it comes to US recovery.
Omar, looking at the liquidity in the market, are we seeing any shifts there from the point of view of open interest? We saw a wave of financial investors coming into the market. How do you read the dynamics around that might indicate where the appetite for oil futures are?
Well, I mean, I was having an argument about that. So open interest is interesting, but it's a blunt tool. So you've got to look at what bit of the market has this increase or decrease in open interest. So you want to look at what speculators are doing. Is their open interest going up, going down, and is that becoming more positive or more negative? So are they getting longer or shorter? Or less long, if you like, because hedgers will always want to basically hedge, so they always want to sell. It's not such a clear kind of tool in terms of looking at that open interest. But if you want to look at a way to kind of assess how much money is coming into oil, you can look at flows into funds. So you can look at flows into ETFs. You can look at like the US oil fund. You could look at money going into commodity ETFs. And all of those are going up. The biggest commodity ETFs, basically, that are not specific to oil, have a large oil weighting. So if the question is money coming into oil, then the answer is yes, and at a big pace. Can you hear me, Sean?
Yeah, I could hear you. There was a slight drop there. I don't know if it was you or me, but Adi, the Japan, it was not just India, as mentioned earlier. Japan also, a quarter of the population now in lockdown, the major cities there. OPEC are meeting this week. I mean, of the different things to pay attention to in the week ahead, that would have been the big thing. They're kind of downplaying it. What's the chance of another surprise from OPEC? And should they be paying attention to what's happened this week or the last week in India and now Japan?
Of course, Sean, OPEC pay a lot of attention to what's happening with their customers and what kind of demand projections are likely to happen. And I think it's a very difficult situation for anyone sitting in in that committee to decide, because for the unknowns that I just mentioned. OPEC is in a very tough situation here. I think it's very unlikely to be a surprise. I think one of the reasons why it's very unlikely to be a surprise in terms of sort of further cuts or further tightening is the situation in India, not only because of the demand impact, but the sort of human suffering impact. We know that India has politically been making a lot of noises about their dissatisfaction about the sort of Saudi-led coalition forcing prices higher than they thought should be. And I think at the current sort of situation, I think it would be probably unwise to try and tighten the market, given all the suffering happening in one of the sort of bigger consumers in the world. So
what about I mean, we've seen on the glass half full side, if you like, China coming out of the maintenance season on the refineries. They have plans for a major sort of promotional campaign to boost domestic consumption. I mean, consumption in terms of the economy there. China is going to come alive over the second quarter.
Well, China is looking great. I mean, I think that there's more likelihood that China may at some stage have to start sort of tapering all their growth. I'm not quite sure why they need further stimulus or kick to the economy, because we've seen economic growth year on year, 18%. We see runs in the refineries over 14 million barrels, not far from the US runs at the moment. And overall PMIs are looking excellent. So I think China is looking great. In fact, most of the countries outside India, South America are looking great. If you look at European PMIs, France had a service PMI well over 50. I think it was 50.4 for the service sector. UK demand is looking very, very good as well, partly to do with the quick rollout of the vaccines. What all that data, Sean, is telling me is that we are actually, even though we have this still terrible situation in terms of COVID, we are far from being out of the woods. It tells me that we're actually learning to live with the pandemic. And in spite of all the bad news that we see, actually, mobility data is picking up pretty much everywhere. That's not unexpected, because people want to use less public transport, and you know, jet demand is still pretty weak. But we are learning how to live with the disease, and with the vaccinations and everything else. It's very hard to be pessimistic regarding demand. So that's probably another reason, Sean, why I think OPEC may just you know, continue with their sort of gradual increase in production, as already agreed.
Randall, the dollar weakness and the continued sort of mantra by central bankers, as you mentioned earlier, including the Fed, that there's no willingness, desire to taper bond purchases, and yet the signals for inflation are significant. My new favorite data point is the benchmark for lumber. The futures contract on lumber, wood, is up 50% this year. And of course, everything in America early in terms of housing is built with wood. How long can the Fed ignore this, do you think? And is there any political support for the likes of the former Secretary of the Treasury, Larry Summers, who has been screaming fire in the cinema?
Yeah, that's a good question, Sean. So, I mean, of course, my gauge is really the bond yields, and you know, we have seen that uptick in bond yields since, I would say, since Feb. When it was below that 1% mark, it's, you know, when shot up to about 1.7%, there's been a slight pullback. So look, you know, there's no doubt that interest rates are on the rise, inflation rates are on the rise. But I think we just have to wait and see what the Fed does. In terms of oil production out of the US, I wouldn't say that shale is actually going through a boom. Yes, there's been a slight increase. I mean, there's been a couple weeks of consecutive increase in the oil rig count, but that has begun to taper off. And what we're seeing is more concentration on those DUCs or DUCs, reducing those DUCs, completing those wells as opposed to new drilling. So I think we're far from this shale boom that some are predicting. Nevertheless, it's going to be a slight and steady increase, but we have to look at possibly the next 2 to 3 years to see oil production really come back to pre-pandemic levels.
Omar, the move on oil this morning in Asia, which sort of at the outset seemed like a sort of a minor move downward, it's not an insignificant, 1% move down on both WTI and Brent. And as you pointed out at the beginning, Bitcoin as well at the open had a fairly big drop and then recovered. What do you take to that to indicate the guidance from that for the week ahead?
Look, I think basically for oil to continue, so oil is looking to break out. Either it's looking basically to start motoring up and get to new highs above 68, meaning it has to take out, let's say 63 first and then 64.50 next, and then head up to 68. If it needs to continue lower and correct even more than it has already, it needs to take out the lows at 57.25. And I would suggest that time is against corrections. So why is time against corrections? Because demand keeps improving, people keep vaccinating, and COVID has less and less space in which to move and multiply and do all that kind of stuff. So yes, the cases in India are like 350K and the cases in Japan are 5,000 with 59 deaths. So you've got to get things a little bit in kind of perspective. It's nothing to do with uncaring or unfeeling or not sad or sad. I think basically if you need to see a correction, you need it to happen now. So that's why it did happen now, but you need basically to push the market. If you're bearish, you need to push the market now, because as time goes on, those 350K will become less, and the 5,000 cases in Japan will probably disappear in the next couple of weeks or so. UK is improving, US is improving, Europe is improving, people are getting vaccinated. It's not it's not hope, it's medicine, it's vaccinations, it's science, it's
Adi,
provable.
On all of that, and that's, I mean, my sense is that that's baked in the cake, right? We've had the World Bank come out with the bionic GDP growth numbers, the IMF backing it up. Yet oil prices haven't really taken a momentum off those really bionic forecasts. So where is that momentum going to come from if not if in that equation that this is baked in the cake?
That's a very good point, Sean. I think back to fundamentals. I would agree with Omar that if there's a breakout for the oil price, it's got to happen in the next 3 or 4 months, because simply on the basis of fundamentals and demand and supply, you would imply, as Randall also said, in terms of shale and non-OPEC supply this year, it's muted. We only expect about less than 500,000 barrels of added demand or added supply from non-OPEC. So assuming that we are getting through COVID, demand should be picking up a lot, and OPEC is in a very good position. However, there are two problems to that. At the prompt end, we've got this Indian situation, and if you're an investor or speculator, you always have to be on the back of your mind, well, just take an extreme case. What if there's a new strain, and what if we get a new wave in China? Everyone assumes that China is impregnable. Well, it's not. It's not impossible that something happens there, and all this great demand will suddenly turn around. The second, probably more important and less speculative point, is that we are expecting a growth of non-OPEC supply next year of 1.4 million barrels. That's a lot of extra oil coming out, and the demand is going to sort of level off. So if you look down the sort of forward curve of any benchmark you want, you're looking at sort of below $60 oil in a couple of years' time. So market is not buying any great breakouts. So if we do have fundamentally any breakouts, we're going to have them in the next 2, 3, 4 months. After which it's very likely that that's going to be capped by the sort of market fundamentals.
On that point, just to follow up, aviation fuel has always sort of been held out there as the kind of next big shoe to drop from the point of view of demand. We've got somewhat conflicting signals. Clearly, America internally looks positive, but at the same token, we have the US government doing a travel warning on 150 countries. Your thoughts on how important the recovery of aviation fuel is in the second half? We have major banks coming out, HSBC and others, saying that they're going to be not supporting business travel. How big a factor is that?
It's very important. I mean, you basically, we're still picking up in terms of mobility, or i.e. gasoline demand, but the jet demand is still very, very muted. But I would agree with Randall, what he said early on. I think there's a lot of pent-up demand that just waits to get out. I mean, I talk to my wife, I talk to my kids, everyone wants to go somewhere ASAP as soon as we can. But in the meantime, my personal experience, I just went across Europe.
I think it's called the pub.
Absolutely, pub talk, exactly. But there's a need. But at the front end, I just went across Europe, and I'll tell you, Sean, it's a nightmare to travel. The documentation that you need, all the paperwork that you need, and to get it right, and the queues are just quite off-putting. So I think quite a lot of people will want to travel as soon as possible as they get their vaccines, ideally as soon as there's some agreement on passports. So there is a fairly good chance by the end of the year we will see a big pickup in that demand, but at the front end is not showing any signs of picking up.
Well, there was an important story overnight as well, with the EU signaling that they were going to open up to the US tourists to come in to Europe this year. But the point that they were still sort of stuck on is how to agree on the paperwork that shows vaccine certification, a piece of paper that both sides can agree to, and what it looks like. But Randall, this week also has our big oil majors coming out with their quarterly results. Expectations there, can that be a momentum of optimism towards further progress for the oil majors?
Yeah, I think it could be, Sean. In fact, I saw one report from Baker Hughes, Halliburton, and Schlumberger, and I mean, I think they're expecting better results, but again, it's going to be very muted. It's not going to be anything to really jump and scream at, but nevertheless, there's going to be some improvement, yeah, and I expect that momentum to carry through until fourth quarter. But you know, in terms of U.S. overall production, we're still down about 2 million barrels per day. So again, you know, yes, there is pent up. I agree, there is pent up demand, but again, that demand is really dependent on mobility.
Well, if you can't get US oil pumping at $65 a barrel, it seems to me that there's something structurally absent here. And I think Omar has mentioned it a number of times. Something's wrong in the shale patch if you can't make a buck at 65. Let's go to the survey question today, which is the outlook for OPEC. I'm not giving up on this surprise thing. I think, knowing Prince Abdulaziz for 25 years, he likes a surprise. I'm not sure if he's going to give it up on this occasion, but who knows? Do you think there is any chance OPEC will make it 4 times in a row and surprise the market this week? Yes or no? Is there still a surprise in OPEC this week? Yes or no? Omar, looking ahead, the market, as we say, has opened down on Monday morning. This sentiment for the week ahead, where do you things moving?
So I was just watching that movie. You know, I think it's called 300, about the Spartans fighting against the Turks and that kind of stuff, right? So
Good old-fashioned.
Yeah, exactly. So I think basically the market is like taking a charge of the enemy on its shield. So the bears are pushing and pushing and pushing and pushing, and they're getting tired. When they get tired, I'm not sure, but I think it's happening now. When they do, swords come out, and then you start, and onwards you go. So I think you've seen that kind of, the momentum. Don't forget, is a momentum of selling that we saw from that high at 68. We saw a momentum of selling. That is what is basically being slowed. So it's being slowed. Once it's slowed enough, then the question is getting it turned and pushing the other way. So I think that selling momentum is definitely slowing. And I think hopefully soon we start seeing that kind of bullish momentum come and steamroller everybody to the upside, I hope.
Adi, your thoughts the week ahead, and also welcome an update on the first month of the Murban futures contract.
Sure, Sean. In terms of next week, I think we just it's going to be a demand story. So we're going to watch what's happening with the situation in India, COVID, and most importantly, what the impact on demand overall is going to be. I'll be looking at the earnings. I think we've got obviously, apart from OPEC Plus meeting, which I don't think is going to be a big deal, but you're absolutely right. I would not discount any surprises. We're going to have earnings from a lot of oil companies. I think we've got today BP, then we've got Shell, Exxon, and so on. Why is that important is because obviously if they show good earnings, which I think they will, there's a lot more chance they might be investing a little bit more, especially in the shale patch. I think Chevron and the likes have been rather conservative over there for very reasons of showing good profits. What was your second one?
The Murban. We're at the end of month one of Murban futures trading.
Well, this is the key, Sean. I think the Murban is as I sort of expected, has been ticking along. I think it has every chance to be a successful contract, but there are some caveats. A lot of volumes on Murban have been, by market makers. You can actually quite see clearly from the data that there have been some large volumes done on butterflies, which are very low risk trades, which is clearly the market makers adding to the sort of volumes, which is fine. I mean, all the exchanges.
You would expect that.
Yes, yeah, you would expect that. I think the key now, what I'd like to see the Murban contract do is actually have an orderly physical delivery. And I'm saying this because I've seen DME, I traded DME from day one. It took them about 3 or 4 years to get it right. Just because they were focusing on something else, they were focusing on black box companies, market makers, and so on, instead of actually getting the basics right. I'd like to see Murban contract get the basics right, orderly physical delivery at the end of the first month. Everyone's happy, everything works well, and then the contract moves on. So I think this period will be very, very, very important for the contract.
Okay, let's get the survey result and give Randall the last word this morning. No surprises, say a very confident 55% of the room. Randall, we're also at 100 days of Joe Biden's presidency. What's his scorecard look like? And from America's perspective, what's this week ahead look like?
Yeah, I think, look, I mean, by all counts, I think his scorecard is looking pretty good. As you know, Sean, getting a handle of this pandemic was really at the top of his list. And I think he's done a really good job to get it under control. He's really pushed for it, up to 3 million doses per day. And, he made a promise, right? He made a promise to the American people by stating that by July 4th, right, he wants families and friends back together. So I think that's the narrative. And, I myself look forward to July, a really good July 4th. And I think you'll see the momentum just build. Stimulus, look, the checks are still rolling out. People are still receiving stimulus. And we also look forward to that infrastructure stimulus, if and when it goes through Congress. And I think that in itself will gather a lot of momentum for the US economy.
Well, I suppose as Omar started out with saying this morning, it's forever the managed economy, whether it be the central bank or whether it be OPEC. It seems that the gift keeps on giving. It was certainly nice to see football fans back in the stadium yesterday at the Wembley, if indeed the result was a little awkward. Manchester City winning, one has to say, as a Man U fan, that's not great. But nonetheless, we don't win anymore and they win all the time. That's the way it goes. We'll wait our turn another 20 years. But thank you, everybody. Omar Najee, as always, great insights. Adi from London and Randall from the US. Really appreciate your time this morning. Thanks, everybody, for joining us. We'll catch up with you during the week. Oil price is down 1% this Monday morning in early Asian trade. Thank you very much.
Take care. Bye.
Thank you.